Hi, and welcome to this week's Property Insider video. Today, Dr. Andrew Wilson and I give you an update on what's happening on the ground in our property markets. We talk about some references in the media to a property bubble already. Interestingly, Andrew Wilson predicted that last week. We talk about boom time auction clearance rates, how the Reserve Bank feels about what's happening to property prices, the fact that despite home building approvals being high, apartment approval numbers are low, and that could lead to some undersupply problems moving forward. Lots to discuss this week. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so you can be kept up to date when we bring out a new show. The Australian residential property markets have started the year strongly as buyer interest stepped up another gear. Property prices across Australia rose around 0.9% in January overall, and they've reached new record highs. Last week, 9 in 10 properties taken to auction in Sydney sold, and there were strong auction clearances around the country. And on the ground, our buyers agent team at Metropole are seeing long queues of prospective buyers that open for inspections and multiple strong bidders at auction. Now, in our chat last week, our Property Insiders chat last week, Dr. Andrew Wilson predicted that somebody was going to call this a property bubble sooner rather than later. And not surprisingly, he was right. I've already seen two references in the media to a property bubble, even though we're really only at the beginning of a new property cycle. So to get a better understanding of what's happening on the ground in our housing market, I'm looking forward to my weekly chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hi, Andrew.
Hello, Michael. Yes, are you feeling bubbly? I mean, isn't that the looking bubbly, apparently, according to those, let's call them experts, but I think that's drawing a long bow. But yes, we've gone from bust to boom and the bubble's inflating again, apparently.
No, we've actually missed the boom. It's already a bubble, Andrew, but that's okay. So, as usual, I'd like to get your take on a number of news items that have occurred over the last week. But, Andrew, let's start with auction clearance rates.
Yes.
Because most capital cities reported, may I call them, boom time clearance
Absolutely.
rates, despite a rise in the number of properties for auction. I know that when auction clearance rates remain above 80% for a period of time, it suggests there's significantly more buyers in the market than there are good properties. And this leads to rising house prices.
Absolutely, Michael. And we saw that last year in the Sydney market and Melbourne when clearance rates were tracking consistently around 80% and above 80%. We had prices growth. And we've always discussed that clear relationship between changes in prices and changes in clearance rates and the level of clearance rates. And last weekend was a very big weekend. That 89% result in Sydney is the highest I've had since May 2015 on any weekend. And in fact, it was the third highest sort of in the modern era on record. So that's a very strong result. Listing numbers just over 400, which was similar to the same time last year. Of course, it was a big lift on the 250 the weekend before, which we would expect as we move from January to February, and numbers will continue to rise. But yeah, very strong result. But Melbourne was interesting also. It was over 80% again, Michael. That's consecutive weekends. But Melbourne had a very big lift in listing numbers. It was well over 500 properties up for auction, which was a 50% increase on the weekend before. And that was well above the same weekend last year. So Melbourne sellers are really up and about. And of course, there's a lot of pent up energy from the shutdowns last year from sellers particularly. So they're wanting to, I guess, make up for lost time from last year. So numbers in Melbourne will rise quite quickly. And of course, we're only 3 weekends away, Michael, from the Labor Day long weekend. And typically before that long weekend, we have our first Super Saturday of the year, and we'll have very big numbers, so well over 1,000 properties going under the hammer on that day. And that's always a buyer bonanza in terms of choices of property. So that's going to be a big day. But look, all markets were strong. Even that Brisbane market with 69% clearance rate is a very strong result for Brisbane. And look, the Brisbane market over the last 6 months or so, Michael, has really recorded some quite spectacular clearance rates for that market, which we usually see in the high 40s and low 50s. It's been much higher than that, but certainly all markets very strong on the weekend. We're certainly up and running at the moment, Michael, and no surprise we're getting a lot of hysterical headlines as a result, but it will run out of steam, I believe, by the end of the year.
The hysterical headlines have started as you predicted last week. And I know you've been really busy in the media They're keen to hear your thoughts of what's ahead for our property markets. So, what are you telling the media, Andrew?
We should look a little deeper into the background of what's happening now. We've got two catch-up energies working. Firstly, we're catching up from lost time last year through the shutdowns, particularly Melbourne. Pent-up demand there. It's like a damming over the normal supply and demand flows. And of course, the other big catch-up in Melbourne and Sydney is that their prices are still about where they were in 2017. And of course, since then, we've had a 1% fall in mortgage rates. We've had a 6% increase in income. So obviously it's much more affordable property in Melbourne and Sydney compared to 2017 because you've got a higher income and you've got a lower interest rate, and yet prices are the same. So this is all catching up to where we should have been. It's a normalisation of the market. And that's why once we absorb that 6% increase in incomes and the 1% fall in mortgage rates, which will likely take this year, and maybe we'll get double figure growth as a result, we will really, as I said, run out of steam, because you can make no mistake with those high growth numbers. The Reserve Bank will be watching banking lending conditions very closely.
The momentum will work its way through the market. But talking
Yep.
about the Reserve Bank, last week, Reserve Bank Governor Philip
Yes.
Lowe gave his views on the year ahead. He gave a speech to the National Press Club, and he explained we can draw comfort from a couple of things that happened last year. He said Australians responded well in a crisis. The economic downturn wasn't as deep as initially feared, and the bounce back was earlier and stronger than the Reserve Bank were expecting. And he said, as we're starting 2021, there's still quite a way to go before we reach our goals of full employment and inflation. But people were already asking him what's happening with the housing market. And he mentioned that he's not concerned about it and it's not really their job. All he's concerned about is responsible lending. But there are people out there saying this quantitative easing program is going to blow an asset price bubble. I don't know. I'm not an economist. You are, Andrew. I would have thought that has more to do with the long-term interest rates, and housing is really more variable and related to short-term interest rates. No bubble ahead.
This is, again, we just don't seem to have any depth in analysis of these issues. I mean, asset bubble, when was our last asset bubble? Can someone please tell me? Have we ever had an asset bubble? I know there's a lot of interest in these things from Treasury and the Reserve Bank, but it's not something that's based in any sort of factual historical evidence. And as long as our banking, it's all about the finance sector, Michael, and as long as our banking sector maintains those strict lending conditions, we can't move into a bubble environment, because that only occurs when we move ahead of our underlying lending patterns. And that means repaying a higher proportion of our income or putting a lower deposit into our properties. And banks are very rigid in their lending conditions, more rigid, I believe, than they should be to some degree, particularly in regard to investors. And I'm not quite sure what the Reserve Bank, when they refer they're not interested in the housing market, by geez, they were very interested in it in 2015, 16, and again in 2018. So I think that's a little disingenuous. Heaven help us if the Reserve Bank feels motivated to again interfere, as it did, I guess, cheering on APRA back in 2015 and then again in 2018, 19. And this is just a catch-up market in Melbourne and Sydney. We've just got to keep our eye on the banking sector, that they maintain rigid lending conditions, and they will. If anything, they've become more rigid and more risk averse since the Royal Commission, particularly 2 years ago.
Well, if we don't learn from our mistakes, there's something wrong. So hopefully they have, and hopefully the Reserve Bank has as well.
And,
Now,
and
another
hopefully they get it a bit more right this year.
that's a good point. Another bit of news this week was the Australian Bureau of Statistics
Yeah.
building
Yeah.
approval figures.
Yeah.
And it's really a tale of two stories, isn't it? That building approval for dwellings, single dwellings, boomed, but for apartments, the unit approvals was down sharply. Now, there's
Yeah.
no doubt that the government incentives have the home builder scheme, which is now the first tier of it has petered out, was a big factor in this. But the lack of apartments could be an issue moving forward.
Absolutely, Michael. And we shouldn't be surprised at a record month, December, for building approvals for houses. And of course, it's been a big lift in that the number of approvals for houses over 2000 or 2020 compared to the previous year. But we're really still not back to where we were just 3 years ago in terms of house approvals, and unit approvals, as you said, fell again. And we're building around about half what we did in 2015 in terms of new units. And overall supply is down, new dwelling supply is down quite sharply as well. So we've been saved, I guess, in the shorter term, medium term, from real apparent signs of an undersupply of dwellings in Australia by the closed borders, reduced migration. This, of course, will help to counterbalance that undersupply that we're moving into now. But eventually it will have an impact, particularly, as you said, the second part of the home builder scheme is due to finish at the end of March. It'll create a lot of jobs going forward this year, which is a good thing, but it's really done nothing for the apartment market. And really, the apartment market is more labour intensive and has more economic energy than home buildings. A bit of a quick fix, and it's a good thing for the economy, but it's not doing much for supply over the medium to longer term, Michael, which I'm quite concerned about.
In due course, our borders are going to open and people from around the world are going to remember that Australia was the country that beat COVID better than anywhere else, and people are going to want to come and live here, and most of those people are going to want to live in apartments. At the same time, the government wants those people to come in to grease the wheels of industry, to boost our economy. They recognise it's one of the quickest and easiest ways to boost Australia's economy by having more people spending.
Yeah, that's right, Michael. And we had some data last week about the some short-term preliminary data on regional movements or on movements between capital cities in terms of migration. And it was interesting that we saw, not surprisingly, a big shift. The only real movement when we look at seasonal factors was in Melbourne, where there was a big movement out of Melbourne over the September quarter. And when we look back to the September quarter the previous year, we can see that that was the big change in all of the capital cities, was people moving out of Melbourne during that spring pandemic. But it just shows you we can have shifts over the shorter term in population, particularly interstate population. And this can have movements, and this can have an impact on the nature of demand and supply in those particular areas when you do get a surge, particularly inwards from interstate migrants. And we need to have more supply to be able to cater for that.
Well, again, an interesting news week. Lots of things happening. Let's keep an eye on how the media handles it and how many more bubble stories there are. Look forward to catching up with you again next week, Andrew.
Yes, it's bizarro world, Michael. It's only 9 months ago when we were supposedly heading for a 20 or 30% price crash. And who would have believed if we went back there that the headlines would be all about bubbles now? It'd be just, bizarre. But that's the space we operate in, Michael, is it not?
It is. Interestingly, some of those people are very quiet at the moment.
Not for long.
That's right. See you next week.
See you
Bye.
later, Michael.